Well, shares of Meta and Amazon are extending gains today, hitting new highs in this session as investors cheer on their latest quarterly results. The strength in the fourth quarter driven largely by a rebound in digital ad sales. Amazon saw a 27% jump year on year, while Meta more than tripled overall sales from the same period last year, with a big chunk of that coming through from ads. Joining us now is Mark Shmulik, Bernstein Internet Research Analyst. Mark, so much of this is about setting expectations. Certainly investors liked what they saw yesterday after the bell. How do you sort of put these names that we've seen this week side by side to see why these particular names are being rewarded in such a big way today?
Yeah, look, it's you've certainly seen divergence this quarter. Starting with Meta, well at the top. Amazon certainly up quite a bit. Google was down by a similar amount that Amazon was up, and of course some of the others. And I think the biggest reason for that is kind of going into this year after the big year the Magnificent Seven have had last year. There wasn't a lot of like really great conviction about really good ideas of what do you own in internet and tech. And I think those companies that put up the numbers where it mattered most and kind of calmed the biggest fears or worries about specific names performed the best. Meta, the biggest question heading in to 2024 was, do you really want to own Meta into a decelerating revenue growth environment? Can we really trust them to keep their costs in check? And then they put out a monster guidance to suggest that the question we should be asking is, how long can they keep this up? And with Amazon, there was certainly a lot of excitement and a lot of optimism that, 2024 was going to be the year they're going to finally deliver that operating income inflection, we've long held out hope for. And that's exactly what they did. They put out a very, very strong beat on operating income for the fourth quarter. Their comments suggested that operating income growth is durable, and it's showing up in the guidance for Q1. And this is exactly what investors want to see right now.
And Mark, you called Meta, especially for that quarter, the Patek Philippe of internet. Now that's a pretty big statement to make, given especially when you think about the price and the significance of Patek Philippe and their watches. Talk about what you're looking at there that sets Meta apart and what is going to keep them having that edge. As you mentioned, if they're going to be on top, what's going to keep them there?
Yes, as a watch aficionado, still not wearing any watches, but I think what stood out, why I called it the Patek Philippe, is really a couple reasons, right? The famous Patek kind of slogan is, you never really own one, you just hang on to it for a generation. And the biggest complaint about longer term investors with Facebook and now Meta has been, there's always this view that there's an expiration date, to social media. And I think the more important thing I took away from this earnings was not the revenue beat and kind of guidance for 2024. That's great. You do need a strong core. But what they really showed is the longevity of this business, this vision, that Mark has, that we've all questioned at some points in the past. The adjacencies are there. Threads, usage is up. Reels usage is up. WhatsApp is growing in the United States. We've got north of 3 billion users, and Facebook Blue is still growing in the US. This isn't going anywhere. And longer term, all the investments in AI and the metaverse, whether you believe in it or not, there's a pathway that, this company's going to find a way to be around forever. And so just like Patek, my comment here is you can own Meta stock and you can hand it down to your kids.
Mark, there's certainly been a lot of questions about the impact generative AI is likely to have on ads. You look at somebody like Meta, obviously Mark Zuckerberg talks about AI as a whole being really a huge booster because it allows them to target their users a little more. When it comes to Google, though, Alphabet, how do you read the impact right now? I mean, some would argue that there could, Gen AI is likely to be a headwind for them on search, and that some of that was starting to be reflected in this most recent quarter.
Yeah, it's interesting, right? Because if you look at where Google beat and surprised, their cloud business, surprised, it's kind of turned around kind of the deceleration we saw last quarter. The pathways there for margin expansion, which is certainly something investors have wanted to see from kind of Google. But the big debate is search numbers were really just in line, and I tend to think that's pretty good. But when the biggest debate is Google actually an AI winner or a loser? And if they're winning it in the cloud business, but losing it in search where there's more entrance competition, we've certainly heard of ChatGPT, Perplexity, and others, kind of saying, look, if if generative AI changes the game for how we behave, online, does that put that mode into question? And, unless they're going to put up significant beats on search revenue growth, this year, that question's not going to go away, which makes it a little bit more difficult to kind of own in size and get excited about owning Google here as a stock relative to somebody like Meta, who doesn't seem to have any real generative AI risk. If anything, it's certainly something Mark called out on the earnings call yesterday, that you can now get a Meta powered AI assistant that's going to be embedded in their smart glasses, embedded into their suite of applications, improving advertisers' ability to target and deliver generative AI, driven ads. You could see a lot of the upside potential there. Whereas for Google, you're talking about a potential risk, whether it's real or not is still very much to be determined, but to their cash cow.
So then, Mark, we've been talking a lot about the weight of expectations. Obviously, if you're an Nvidia, if you're a Google, but what about Amazon? How do they fit into that spot in terms of how they're being valued, given that they have very slightly different tentacles from some of these other counterparts, but a lot of overlap as well when it comes to AI and cloud?
No, of course. And, you certainly have some, AI questions with Amazon. Are they a winner or loser in the cloud business? And, if you would have told me 9 months ago that, we'd be sitting here having a great quarter or very clean quarter for Amazon where they're putting up, let's call it only 13% growth in their AWS cloud business, we may have had some questions. But the reality with Amazon is, this is a company that historically, trades on operating income and free cash flow beats and raises. And, this is a company that investors want to see them pull dollars down to the bottom line, not go on another very expensive reinvestment cycle. And those are the numbers where they beat. So back to Google, the number they didn't beat was search, and ad revenues. The number where Amazon beat was the one that people cared about most, which was operating income and free cash flow. And, when you're putting up 29 billion in free cash flow in a quarter, that's a lot to get excited about as an investor. And again, their comments that they're not just going to suddenly put that aside and go reinvest in, the next big bet initiative, that, there's still a lot more juice to squeeze from this, profitability and free cash flow lever. Makes it something that investors can get their heads around. And when you start looking out at 2025 and 2026 earnings and free cash flow multiples, which is something we haven't been able to say, a lot of in the past few years, you could talk yourself into a pretty reasonable valuation to want to own Amazon here and a pathway to north of $200 for the stock.
Certainly investors agreeing with you there, given where the move is today. Mark Schmelek, Bernstein Internet Research Analyst. It's good to talk to you today. Appreciate the time.
Likewise. Thank you for having me.